applicability of new tax regime, the rebate, and today we are going to go through the announcement that was made in respect of new tax regime. We are going to understand with some example how the new tax regime is going to play out from now onwards, and we are also going to take a look at some other announcement that was made during this budget. My name is CA Shoykot Roy, and I have been part of Clear for last 4.5 years. Now, firstly, let's take a look at what are the changes that is going to happen in the new tax regime. Furthermore, we are going to take a look what was the indication, what was the announcement that was made for the presumptive taxpayer, primarily the freelancer and small businesses. Further, we are going to take a look on cap that was enacted, that has been enabled on long-term capital gains. We are going to take a look on the TDS on online gaming and any other amendment that was made in this budget. Now, firstly, we are going to talk about the new tax regime. Now, new tax regime is talk of the town of this budget. However, the new tax regime is not a new item, not a new talking point for this budget. New tax regime has been put in place couple of years back. However, it was seen that the new tax regime was not opted by many of the taxpayers. Why? Because under the new tax regime, no deductions were given. Under the new tax regime, there are there was no deductions enabled, right? There was no standard deduction, no ATC, no HRA, no nothing was given. However, the new tax regime was designed in such a way, a small tax increment was given for small increment of income. But because there was this lack of deductions and everything, under the new tax regime was not lucrative. In fact, we have seen very few people opting into new tax regime. People were going ahead with the old tax regime. However, in this budget, our finance minister had taken steps which can improve improve the attractiveness of the new tax regime. Now, there was some small tweaks here and there, but by doing so, new tax regime became almost as attractive as the old tax regime. However, there are certain cases wherein old tax regime still holds its ground, but new tax regime is gaining, and it is gaining the ground very fast. Now, as per the announcement, the new tax regime will become the default tax regime. Prior to this budget, the default tax regime for you was the old tax regime. However, and you were required to opt into the new tax regime. However, the situation has reversed. Now, the new tax regime will become the default tax regime. Now, what does that actually mean? As we know, every year at the beginning of every financial year, I would say, each one of us are supposed to make declaration to our employer, right? We are supposed to say what is going to be my investment, what is going to be my a house rent that I am paying, what is going to be my home loan interest and principal component that we are going to pay. Along with that, we are also supposed to mention what is the tax regime we are going to opt. If we did not opt into any tax regime till date, the old tax regime would have been selected. But right now, the tax regime that will be selected by default is new tax regime. If you want to be taxed under the old tax regime, by the virtue that you are holding a lot of investment and everything, you need to opt into the old tax regime. Therefore, be mindful for going forward, because from the coming year, that is 1st April 2023 onwards, the new tax regime is going to be our default tax regime. And if you are not explicitly selecting the old tax regime, your tax computation and tax deduction will happen under the new tax regime. Now, there are certain steps that was taken to excuse me, there were certain steps taken to make the new tax regime much more attractive. One of such step is introduction of standard deduction of 50,000 rupees. Previously, the standard deduction of 50,000 rupees was only extended to the old tax regime. But going forward, new tax regime will also be having the benefit of standard deduction. Now, the standard deduction is 50,000 rupees. Now, this will give a huge amount of benefit to a lot of people. Thirdly, to make new tax regime bit more attractive, slabs have been revamped. Previously, the slabs were designed in such a way 5% of tax increase would have happened for every 2.5 lakh rupees of income increase, income increment. However, in this year's budget, every increment of 3 lakh rupees of income will see a rate increase of 5%. So the new slabs as per the new tax regime are from 0 to 3 lakh rupees of income, there will be no taxes. The rate of tax will be 0. From 3 lakh 1 to 6 lakh rupees, the rate of tax will be 5%, which would make your tax of 15,000 rupees. If you have an income ranging between 6 to 9 lakh rupees, the rate of tax will be 10%. So the tax will come to 30,000 rupees for this slab. From 9 lakh to 12 lakh, 15%. From 12 to 15 lakh, 20%, which would make 60,000 rupees of tax under this slab. At beyond 15 lakh rupees of income, the rate of tax is 30%. Now, there is a jump of 10% beyond 15 lakhs, but the slabs right now have been designed to work in such a way that 3 lakh rupees of income will give us 10% or rather 5% of rate increase. Thirdly, the rebate. The rebate under Section 87A under the new tax regime has been increased from 5 lakh rupees to 7 lakh rupees. Also, there is a change in tax rebate from 12,500 rupees to 25,000 rupees. Now, this may seem a little odd that from 5 lakh rupees, 7 lakh rupees, the tax rebate is coming to a change of 12,500 rupees. And how does it play out? Now, if we look in this slide, that from 6 lakh to 9 lakh rupees, the rate of tax is 10%, right? Now, if we plot in such a way that my income is 7 lakh rupees, or rather 7 lakh 50,000 rupees, how it will be? Firstly, out of 7 lakh 50,000 rupees, I will be reducing 50,000 rupees of standard deduction, right? So that will bring down my taxable income to 7 lakh rupees. Now, if we go by this rate, uh, from 3 lakh rupees to 6 lakh rupees, the rate of tax is 5%. The income increase is 3 lakh rupees. Therefore, it is giving me a tax of 15,000 rupees. Now, from 6 lakh to 9 lakh rupees at this slab rate, the rate of tax is 10%. Now, since my income is 7 lakh rupees, beyond 6 lakh, there is only 1 lakh rupees of income. Now, on this 1 lakh rupees of income, I will be applying the rate of tax of 10%, which will give me a tax of 10,000 rupees. So, my tax for 7 lakh rupees will be coming to 25,000 rupees. Now, since the 87A rebate has been increased from 12,500 to 25,000 rupees, I and my income in this case is not crossing 7 lakh rupees. Therefore, I will be entitled to get the rebate of 25,000 rupees on its entirety. Right? Therefore, if your income is uh, no more than 7 lakh 50,000 rupees in a single year, and your primary source of income is from salary, then there is a very good chance you need not pay any taxes. However, it needs to be kept in mind that even if you are not required to pay any taxes, you are required to file your income tax return within the due date, because just because you are not paying any taxes, that does not mean that you are precluded from filing the income tax return. If your income is more than 3 lakh rupees under the new tax regime, then most definitely you are required to file your income tax return. And finally, the surcharge rate. The surcharge rate uh, has been reduced, or rather, the highest surcharge rate of 37% has been done away under the new tax regime. Now, previously, if the taxable income was more than 5 CR, in that case, you were supposed to pay 37% of surcharge. However, if you are opting to go with the new tax regime, even if your taxable income is crossing 5 CR, you are still supposed to get a tax surcharge rate of 25%. Now, this was a big change under the new tax regime. Now, let's try to understand how the tax under new tax regime is going to be calculated. For these purposes, we have taken a salary earning of 16 lakh rupees, right? Now, uh, previously there was no standard deduction given to the new tax regime, but now it is given. So, firstly, I we are going to reduce 50,000 rupees of standard deduction out of my salary earning of 16 lakhs, right? So, from 16 lakh rupees, 50,000 is gone. Now, that will give me 15 lakh 50,000 rupees. Now, home loan for self-occupied house property, it is still not available under the new tax regime, so there is no deduction available. There is no 80C, that is home loan, home loan principal, uh, LIC premium paid, ELSS tax saving FDs, etc., etc. Therefore, no deduction for this case. There is no medical insurance for self or senior citizen parents or non-senior citizen parents. That option is still not there. Therefore, zero will be the deduction in both the cases. My own contribution to national pension scheme, that also is not there. However however, one deduction that is still there under the new tax regime, that is employers contribution towards national pension scheme, which is limited to maximum 10% of basic salary. Now, in that case, we are assuming 50,000 rupees of contribution has been made through employer in national pension scheme, which is giving me a taxable income of 15 lakh rupees. Now, if we put everything in here, we will see up to 3 lakh rupees there will be no taxes because the rate of tax is zero. From 3 to 6 lakh rupees, the rate of tax is 5%, which will give me a tax of 15,000 rupees. From 6 to 9 lakh rupees, the rate of tax is 10%, which will give me a tax of 30,000 rupees. 9 to 12 lakh rupees of earning, 15% is the tax rate, so it will give me 45,000 rupees. From 12 to 15 lakh rupees, uh, the rate of tax is 20%, which will give me 60,000 rupees, and beyond that, there is no income, therefore, no tax is levied, right? So, total income tax will be 1,50,000 rupees. On top of that, we are going to add 4% of health and education cess, which will give me a total tax of 1,56,000 rupees. Now, let's going through the numbers, let's try to analyze what benefit then this structure of new tax regime can give to us. Firstly, since there is no deduction for tax saving, right? There is no deduction for tax saving investment, I would say, under 80C. Therefore, we are not obligated to park our money into those tax saving funds, right? Now, if we are not obligated to do so, then what will happen? We can easily park our money, we can easily invest the sum of money into any other instrument that gives us a better return. Normally, what we have seen that the option of tax saving instrument, the return option of tax saving instrument are very, very limited, right? So one of the exception is ELSS. However, all the other tax saving instrument gives us a very meager return as compared to ELSS. Now, since we are not obligated to get any deduction under, or rather making any tax saving investment under ATC, we can go out and select any fund which can help me build my wealth. We can target any high return giving, uh, maybe mutual fund units, maybe stocks, whichever investment floats my boat, I can just go ahead and invest my money over there. Now, at this point of time, a question might arise that if I am getting a return from those investment, right, or I am also supposed to pay the taxes on the return that I am getting. Now, in this case, I would believe if your return from those investment are more than 12% or 15%, right? Normally from markets we have seen the return is around 12% to 15%, right? So even in that case, if we factor in you belong in the highest slab, that is highest marginal slab of 30%, you still would be in a better position had you opted in for the old tax regime. Therefore, since we are not bound by the notion of tax saving, we can go full fledged towards creating our wealth. However, it is to be remembered the new tax regime has to be implemented, or rather has to be taken into consideration for tax purposes if you have a strong inclination and strong risk taking appetite and want to grow your wealth in quick succession. Furthermore, in this scenario, we are also assuming the tax saving option is going to be exercised by you only under 80CCD2, that is employer contribution towards NPS. If you are not making this decision, you are not saving the taxes under this route, then this might be a tricky situation for you going with the new tax regime. So if you are a aggressive investor, then most definitely new tax regime can work well for you. Now, coming to the second big announcement, that is benefit for presumptive taxpayers. Now, presumptive taxpayers uh, can opt for taxation. Presumptive taxpayers are divided into two broad categories. Number one, the MSME, the small businesses, and number two, professionals who are doing consultancy services, right? Now, firstly, we are going to talk about the small businesses. To opt into presumptive taxation for small businesses, the turnover should not be more than 2 crore rupees as per the budget that was done previously, right? However, in this budget, the turnover limit has been increased from 2 cr to 3 cr. However, one additional caveat has been put in place. That is, my cash receipt should not be more than 5% of my total receipt. Again, the higher tax or rather higher turnover limit of 3 cr will be applicable for me only if my total cash receipt is not exceeding 5% of my total receipt. If my total cash receipts are in excess of 5%, in that case, the older limit, that is 2 CR, shall still continue to be applicable for me. For professionals, the limit has been increased from 50 lakh rupees to 75 lakh rupees. Again, provided the cash receipt is no more than 5% of my total receipt. The total receipt in this case is professional fees that you are collecting, and in respect of business uh, turnover, it is pretty much simple. Furthermore, professionals under 44 ADA, the best part about the opting for presumptive taxation system for professionals is that they can straight away declare 50% of their turnover as profit. They are supposed to declare at least 50% of their turnover as profit, and they are supposed to pay taxes on that. Similarly, for businesses, the percentage the percentage is 6% or 8%, depending on the mode and the date within which the payment has been received. Therefore, for professionals and small businesses, it's a very good option if their turnover, most turnover and professional fees are within that specified limit and coming entirely through digital mode or checking banking channels. Now, one thing I would like to mention over here is uh, any bearer check is as good as cash transaction for the purpose of this section. Therefore, if you are getting a bearer check and thinking that I have received the money through banking channel, then it is a misconception. You need to get the money either through account pay check or account pay demand draft. Then only it will be considered that you have received the money through banking channel. Excuse me. Now, another big thing that has happened, that is there has been a cap placed on the tax saving on LTCG. Now there are two sections under which primarily tax saving used to happen, right? If I am selling off a immovable immovable property, that is a house, I could have gotten a exemption under section 54 for capital gains. And if I am selling off a long term asset and investing in a residential house property, I could have gotten deduction under section 54F. Now, prior to this budget, uh, there was no cap on such investment. However, from this budget onwards, maximum amount of capital gains that I can save is 10 CR. Any amount, any amount which is in excess of this 10 CR, that will start to be taxed in my hand at applicable rate. Now, let's try to understand how this is going to play out. Let's assume I have a house property which I have sold. Sorry, I have a house property, a bungalow maybe, which I have purchased for uh, 10 CR, right? And that has happened 5 years prior, right? Now, after indexing the price of the house property, after indexing the price of the house property is coming to, let's say, 15 CR, right? Now, I am selling off that house property, that bungalow, at 35 CR. So, my total capital gains in this case would be 35 CR minus 15 CR, total 20 CR. Now, I am using this 20 CR to purchase another house property or a bungalow which is placed within India. Now, prior to this budget, if I have invested the entire 20 CR into purchase of a new house property, it would have been tax exempted, right? Let's assume the price of the house property is coming to 22 CR, right? So I have invested entire 20 CR. Therefore, I need not pay any taxes on any amount of capital gains. However, from this budget onwards, on the gains of 20 cr, I will be able to save taxes only upon 10 cr. Remaining 10 cr will be taxed in my hand at the rate which is applicable for long term capital gain. The rate of tax in this case will be 20%. So I will be earning a capital gains of 10 cr, which will be taxed in my hand. The amount of tax I need to pay is 2 cr. Another big announcement that was made under this budget is TDS on online gaming. Now, TDS on online gaming was always prevalent. However, there was a threshold limit placed upon it. Right? If your winning was more than 10,000 rupees, then TDS amount or tax at the rate of 30% would have been deducted in your hand and remaining amount would have been given to you. However, from this year's budget, the qualifying limit of 10,000 rupees has been done away with. Therefore, even if you win 3,000 rupees or 2,000 rupees from online gaming, you are going to face a TDS of 30%, right? So, in that case, the TDS is going to be 750 rupees, and you are going to get 1,750 rupees in your hand. However, this amount of TDS that you have paid, right, your distributor of the price has deducted and given you the remaining amount. For that amount, you will always get the credit when you file your income tax return. Therefore, the ambit of filing of income tax return has been increased by this section. Finally, we are going to take a look at any other announcement that was made. Firstly, this is a amendment in a section 24. This is a very well known section. This is section 4, claiming interest on home loan. Now, prior to this budget, uh, if you had a home loan and had taken a deduction under section 24, right, you had the option, or some of the person have done this practice. What they did was, even if they have taken the deduction for home loan interest paid, they still considered the amount of interest paid for that house property as cost of acquisition or cost of improvement, I would say, and increase the price of the house property, the cost of acquisition for that house property, right? Which would give a rise to a inflated cost of acquisition for the house property, even though they have taken a deduction under section 24. Now, the amendment has been made under this act so that if you have taken a deduction for interest on that house property, then you cannot add that interest payment as cost of acquisition or cost of improvement for that house property. The same situation translates for the principal repayment as well. Therefore, it's a very good move taken by the income tax department, taken so that many people who are doing this practice, which is incorrect, have been prevented. Finally, uh, market linked debenture. Any capital gains arising out of transfer of market linked debenture now will be treated as short term capital gains, right? We are not going to look at whether they are held for 36 months or more or lesser than that. We are simply going to assume if you are selling off market linked debenture, it whatever the gains it has given me, it will be a short term capital gains. Similar situation will apply to the loss of it as well. Therefore, if you are selling market linked debenture at a loss, it will be treated as short term capital loss. Now we are at the end of our session, and if you have any question, we are going to take it up. Right. So there are many questions coming in. So one of the question that is attracting me is, uh, Yogendra Babu is asking if my income is 15 lakh rupees. So up to 3 lakh rupees there is no taxes. Therefore, I will be removing that amount, and from there onwards, my income taxable income will come to 12 lakh rupees, and the tax calculation will be happening on that part. Firstly, Yogendra, uh, I think your understanding. Let me explain this. Firstly, if my income, my taxable income is 15 lakh rupees, and my slab rate is from 0 to 3, the rate of tax is 0, that does not actually remove from my taxable income. So if my taxable income is 15 lakhs, so it will be segregated into the slabs. First slab will be 0 to 3 lakhs, for which the rate of tax assigned is 0%. Then 3 to 6 lakh, for which the rate of tax has been assigned as 5%, then 10%, 15%, so on and so forth. Therefore, there is no concept of removing 3 lakh rupees out of my 15 lakh rupees of taxable income. Therefore, if you are under the notion that Just because 0 to 3 there is no taxes, I will be removing that from my 15 lakh rupees of income. That is not correct, I'm afraid. But we need to plot my income in that particular fashion: 0 to 3, 0%, 3 to 6, 5%, 6 to 9, 10%, so on and so forth. Second question that is coming, that how many times you can change the tax regime. Now, if your sources of income does not include business or profession, in that case, every year you can switch between the regimes as per, or rather, as there are two tax regimes available right now. In future, what will happen, we cannot say. But right now, if you have no business or professional income, every year you can switch between the tax regime. Now, uh, now only standard. Another question is coming up, that only standard deduction of 50,000 rupees will be removed from overall taxable limit, right? So yes, as of now, only standard deduction of 50,000 rupees will be removed from overall taxable income. However, you still have the option to, you know, go with employer contribution towards NPS. That option is still there for new tax regime. Can we claim for home loan interest and HRA? Well, Manju, I'm thinking that you are talking about the new tax regime. Now, in case you are opting for new tax regime, no, you cannot opt for home loan interest and principal as well as HRA. That option is still available under the old tax regime. Well, Kailash, yes, you can claim both HRA and home loan interest under the old tax regime. Yes, Vikram, I'm afraid there is no change that was made for the old tax regime. Okay. So if you want to claim both home loan and HRA, and if you are staying in the same city, then the rent for which you are paying, that should be for a home that is located very near to that office, because you are staying in that place for your employment purposes. Furthermore, uh, furthermore, to claim the home loan interest, uh, the house needs to be completed and it should be occupied by you or your dependent parents, right? Your parents who are dependent upon you. If this is the situation, then yes, most definitely you can do that. Yes, ATC comes under old tax regime. Well, Kishore, if you are already having the possession of that house property, then only you can take benefit of interest that you have paid for home loan. However, if the house is still under construction and you are yet to receive the possession, you cannot take the benefit. But from the year of possession, you can take benefit of the interest that you have paid for the construction under construction period. However, that amount the amount that you are getting, that needs to be claimed over a period of 5 years, and the total yearly interest claim cannot be more than 2L. Well, the income tax is decided on the total pay. It's not the CTC, not the basic pay. It's based on the salary that you are getting. CTC actually includes your total salary plus any benefit that you are given, plus your employer contribution to PF, everything. So we are going to consider only your package, not the CTC. And from there onwards, we are going to reduce the deductions, etc., etc., if it is applicable for you, and compute the taxes. Surcharge in case of, or rather, surcharge in case the my income is more than 5 CR, uh, is limited to 25%, is applicable only for the new tax regime. Under the old tax regime, it is still 37%. Well, Shiv Kumar, there is no distance or anything mentioned as far as I know, but normally the location should be, the rented place should be near to your office, which enables you to travel faster. Right. So we are at the end of our session. Today I will be calling the quits. Thanks for joining with us, and hopefully you have understood that the changes that was brought into this budget. Thanks for joining with us. Have a great day. Bye bye.